Picture this. It's 2017, and Bitcoin is the talk of the town. John, just a regular guy, hears the buzz and decides to dive in. He buys at $10,000, convinced he's struck gold. But then, the floor drops. Bitcoin crashes to $3,000. Panic sets in, and John sells, swallowing a brutal loss. Fast forward to 2021, and Bitcoin's laughing its way to $60,000 while John's stuck regretting every decision he ever made. What went wrong? Timing. John had no clue when to buy. But here's the kicker. You don't have to be John. What if I told you there's a way to spot Bitcoin's next big move with uncanny precision? Not with a crystal ball, but with simple chart patterns? Today, we're cracking open two game changers: moving averages and Fibonacci retracements. These aren't just lines on a screen. They're your ticket to buying Bitcoin like a pro. Stick with me, because by the end, you'll see how to turn chaos into cash. Moving averages. Bitcoin's mood ring. Let's start with moving averages. Imagine Bitcoin's price chart as a wild, untamed beast. Up one day, down the next. Moving averages are like its personal trainer, smoothing out the drama to reveal the real trend. A moving average is just the average price over a set period, say 50 days or 200 days. Plot it on a chart, and suddenly, you've got clarity. When Bitcoin's price is above this line, the bulls are in charge. Below it, the bears are growling. But here's where it gets juicy. Use two moving averages together, and you've got a crystal clear signal. Take the 50-day and 200-day simple moving averages, SMAs. When the 50-day crosses above the 200-day, it's called a golden cross, a bullish sign that screams, uptrend incoming. When it dips below, you've got a death cross, a red flag for a potential plunge. Real example? In April 2020, Bitcoin flashed a golden cross at $7,000. Spoiler: it soared to $60,000 within a year. Or rewind to 2017. A golden cross kicked off a run from $1,000 to $20,000 by December. These aren't flukes, they're patterns traders live by. Now, not all moving averages are created equal. The SMA treats every price the same, but the exponential moving average, EMA, gives recent prices more swagger, making it faster to react. Newbies can stick with the 50-day and 200-day SMAs for big-picture moves. Want faster action? Try a 10-day or 20-day EMA. Perfect for crypto's wild swings, though the noise can get messy. And here's a tip. Don't bet the farm on one signal. A golden cross is great, but pair it with other clues to avoid a fakeout. Oh, and always, always, set a stop loss. Bitcoin doesn't care about your feelings. So, how do you use this? Simple. Open a charting platform like TradingView, slap on those moving averages, and watch the magic unfold. But how do you know exactly when to pull the trigger? That's where our next tool comes in. Fibonacci retracements. The universe's cheat codes. Next up, Fibonacci retracements. Sounds like a math nerd's fever dream, right? Don't sweat it, it's easier than you think and ridiculously powerful. Based on the Fibonacci sequence, where each number is the sum of the two before it, this tool spits out ratios: 23.6%, 38.2%, 50%, 61.8%, 78.6%, that pop up everywhere, from seashells to Bitcoin charts. Traders use them to pinpoint where prices might pause or reverse after a big move. Here's the deal: Bitcoin doesn't go straight up or down, it zigzags. After a rally or drop, it often retraces part of that move before resuming the trend. Fibonacci retracements map out those sweet spots. To draw them, pick a major high and low. Say Bitcoin rockets from $30,000 to $60,000, then pulls back. Click the low, drag to the high, and boom, your chart lights up with levels. If it dips to the 50% mark at $45,000 and bounces, that's a prime buying zone. Why? Because traders worldwide watch these levels, making them self-fulfilling hotspots. Let's get real with an example. In 2021, Bitcoin peaked at $64,000, then crashed to $29,000. Draw a Fibonacci retracement from that high to low, and the 61.8% level lands around $50,000. Guess what? When Bitcoin clawed its way back, it stalled at $50,000 for weeks, resistance city. Traders who bought near the 38.2% or 50% levels on the way up were grinning all the way to the bank. It's like having a treasure map where X marks the profit. Setting this up is a breeze. Most platforms have a Fibonacci tool. Just select it, click, drag, and watch the lines appear. The trick is picking the right swing points. A clear peak and trough where the price pivoted hard. And while 50% isn't a true Fibonacci ratio, it's a crowd favorite because prices love to retrace halfway. Power combo. Stacking the odd years where it gets fun. Combine moving averages and Fibonacci retracements for a 1-2 punch. Imagine Bitcoin's hovering near the 61.8% Fibonacci level after a pullback, and the 50-day moving average is right there too. Then, bam, a golden cross forms. That's not just a signal, it's a neon sign flashing, buy. For instance, late 2020 saw Bitcoin consolidating near $10,000. A golden cross hit, aligning with a 61.8% Fibonacci retracement from a prior high. The result? A breakout to all-time highs. When these tools agree, it's like the market's handing you a cheat sheet. But don't get cocky, technical analysis isn't foolproof. It's about probabilities, not prophecies. Markets can go rogue, and patterns can flop. That's why you've got to play smart, use stop losses, keep your risk in check, and never YOLO your life savings into a single trade. Bitcoin's a beast, respect it. Putting it to work, ready to try this? Grab a charting platform, TradingView, Coinagi, whatever, and set up your tools. For moving averages, add a 50-day and 200-day SMA to your daily Bitcoin chart. Watch for crosses and trend shifts. For Fibonacci, scan recent price swings, draw those levels, and look for bounces or breaks. Want to trade short-term? Switch to hourly charts, but brace for more noise. Long-term investor? Stick to daily or weekly views for cleaner signals. Think of it like surfing. The price is the wave, your chart's the board, and timing's everything. Catch it right, and you're riding high. Miss it, and you're wiping out. Take 2018's death cross. It warned of a bear market, and smart traders dodged the carnage. Or the 2021 Fibonacci bounce at $50,000. Those who bought there laughed through the next rally. So, next time you're itching to buy Bitcoin, don't just mash the button. Check the charts. Are the moving averages lining up? Is a Fibonacci level in play? That split-second pause might be the difference between a dud and a jackpot.